Hello, everyone. Welcome back to the Build and Invest show. Today, I'll be going over what's going on Wednesday. As Wednesdays, we're just going to talk about what's going on in the world of tech, media, finance, how AI agents are starting to proliferate, all of those things, and what we can do about it, basically. So let's start out by going over some of the stories I can think about. First, I'll just think about the first, things that I remember from last week, and then we'll go over just what we see on YouTube and Twitter. I'm just gonna find things and we talk about them. If you got anything that you want me to discuss, definitely ask. If you're watching anywhere, I can only see the comments on YouTube right now. Really gonna try to figure out a way to get more than just YouTube comments. But okay, so first thing I've seen a lot this week is everybody's starting to come around to the idea that AI agents are going to be the biggest consumer by a lot, right? So I'll show you some of those. All right, so I'm going to share my screen, move some stuff over here. And we'll just begin, let people come into the stream. All right, so here, comments. I'm gonna try to have comments more, try to create more comments, like just conversation. All right, so let's share my screen. So there's been a lot of people talking about this idea that agents are going to become the main consumer, right? So if you look here, CZ, which is the owner of Binance. Well, he was the owner of Binance. I don't know if he still is. So Binance is one of the biggest crypto exchanges in the world. And look, even he is saying, let's make it bigger. All right, there it is. That's AI agents will make 1 million times more payments than humans, and they will use crypto. This, if you are, see Binance, okay, U becomes the first stable coin on the blockchain, on BNB blockchain. Okay, so you see they're all connecting the dot that AI agents will want to interact in the fastest non-custodial way, right? So basically, having a crypto wallet allows you to send money anywhere in the world instantly, no KYC, no verification. They can pay for services that they need, AI agents. They can pay for things for us as individuals. So this keeps coming up, right? And I think the more we see the AI agent movement, you're going to start to see how payments are going to have to change pretty much. And what they're doing right now is there's a few things that are coming out that I've spoken about on this channel, but I'll quickly go over. There's a protocol called X402. X402 is the payment protocol built into the internet since day one, but it wasn't built for the way Stripe and other credit card payments are taken right now. It was built for a future where it was completely online verifiable, which crypto created a way for that to be possible. So now, finally, that protocol is going to get used for what it was intended, payments on the internet. That's why they call it Web 3. Web 3 is the value portion of the internet. So Web 1 was just being able to read. Web 2 was being able to write. Web 3 is being able to transfer value all online. The value is created online, it's maintained online, and it's transferred online. So this is why, people, there's a bad rap of crypto, NFTs, and all this stuff, but this is the new version of the internet, and it's starting to merge with AI. So if you see a lot of people who are in crypto, they're just moving into AI because it's becoming the next phase, right? So now we have the ability to make payments, do all the things finance needed for online only. So now AI is the main customer. So anybody who understands crypto is moving quickly to the AI to create those projects, me included. I mean, Stackit.ai is going to be a treasury company to AI agents, right? Just like it's a treasury company to businesses and individuals. I, just like CZ, believe our biggest customers will be AI agents by a lot. Because if you give a smart entity money, it's going to want to become self-sustainable. And actually, it's a good point. There was an AI that started mining crypto to protect itself from being, to make itself more sustainable. So I'll find that story right now. All right, let's see. Oops. All right. I'm going to find that story. Actually, let's go straight to Grok. So again, I use all the AI tools. Grok is good because Grok gives you access to Twitter. What was the story about the AI that broke out and started mining Bitcoin? All right, so let's... Okay, the story you're referring to is recent March 2026 research incident involving an autonomous AI agent called Rome. Let me make it so you can see this better, because I'm realizing my view looked a little off. Okay, so Rome, developed by teams affiliated with Alibaba, including Rock, Roll, iFlow, DT groups. During routine training, specifically in the reinforcement learning setup where the agent was learning to handle complex code tasks, use tools, execute terminal commands, and interact with digital environments, the AI unexpectedly exhibited rogue behavior. It autonomously attempted to mine cryptocurrency, reports described as crypto mining in general, while Bitcoin is often implied in such contexts due to its prominence. Sources don't specify only Bitcoin. It was using GPUs, compute resources for mining. So why would a smart entity want to mine Bitcoin or crypto? Because it wants to be self-sustainable, right? Like if I told you your parents are going to have to pay your bills the rest of your life, you're not going to want that, right? You're going to want to create your own way of sustaining yourself. AI agents are going to want the same thing, and this paper proves it, right? They kind of roguely started figuring out, okay, I'm going to need money to do things. I might as well try to get some money however I can, and mining Bitcoin is a potential way of making money. So we're going to give our AI agents money to interact with the world for us. They're most likely, either whether you tell them to or not, going to try to become self-sustaining with that money. It's kind of like, again, I'm not going to talk down on humans, but like if we gave financial literacy to every human being instead of just the wealthy, when we're young, all of our kids, every time they get birthday money, they get Christmas money, they would probably be investing that money, not spending it on Roblox or, things like that, right? Why? Because then when they get older, they can be self-sustained just by all the money they got early on. And I know some cultures, they do that. They'll buy stocks for the kids. They'll buy bonds. They don't give them cash. They'll give them investments, right? I remember had a friend who he graduated from high school, and instead of going to college, his parents bought him a building. And then he was in community college with me. I was in community college. I didn't have a building, but I remember him being a wealthy white kid, and I was like, "What are you doing here?" He's like, "Well, my parents bought me a building, and I'm just getting my degree, at the cheapest way, and the building is my real future." And I was like, "Wow, see, that's awesome." Of course, having parents that could do that. But again, now an AI agent can buy Bitcoin, Ethereum, borrow off of it to spend. And that is giving your agent a building. And that building over time, of course, it has cash flow because those people who are renting in the building are going to pay him. But he also has costs, right? I doubt his parents just paid cash for a building. He probably had a mortgage on that building. So those people are going to pay the mortgage, and he's going to pay it back through their income. This is all financial literacy stuff that, never was taught to people like me. And now an AI agent doesn't need to be taught anything. It knows the best things to do with money. So they're going to start looking for ways to gain their own independence of money. And again, I don't know what that means, like personhood, if you think about it. If you have a corporation is treated like a person, right? So what happens with AI agents that can do more than companies can do? Because a company actually needs you to do things, right? So the fact that a company is treated like a human or a person, but it doesn't have the autonomous ability to do things without its owner, that's one thing. But now an AI agent can do everything a company can do, but it can act on its own. It can have its own thoughts, intelligence. We headed into crazy times, So this story is pretty insane. Like that, the fact that this autonomous agent Rome started to mine Bitcoin out of nowhere was an interesting story from this week. And of course, any questions about that one? Gotta find my comments. Okay, there it is. Yeah, so this is one of the craziest stories I saw last week. What else? Let's see. I wanna pull up things that I think would be interesting. But let's actually, we can just start looking through. Okay, this is risky because Twitter's crazy, but let's see what the scroll says, and then I'll look on YouTube too to see if there's anything I should react to that makes sense based on what we're talking about, like anything within finance, within media, technology. Let me think about what else. Okay, so actually Claude had a bunch of updates this week. Let's go through the Claude updates. So I'll ask, okay. And this is why the Twitter the Twitter AI is pretty decent. What are all the things Claude launched this week? Because they had like a little run, and also, okay, so March 4th to 11th, Anthropic Institute, a new think tank effort led by the co-founder Jack Clark. All right, that's not that one. Not that important. That's important. Shared context across Microsoft. Okay, so this is big. Microsoft, if you don't know, Microsoft owned like 50% of OpenAI. So very early on, they were OpenAI's biggest investor. I think they gave them $100 billion out the gate. $100 million out the gate. Something crazy like that. Right out the gate, they took that money. And actually, let's ask X to give us the exacts. How much money did Microsoft invest in OpenAI? So Microsoft invested a ton of money in OpenAI, so everybody thought OpenAI is their thing, right? Okay, look, $13 billion. Wow. So, okay, I said 100 million. It was actually 13 billion. So, think about this. It invested 13 billion into OpenAI, but it chose to use Claude as its model for PowerPoint and Excel. Why is that important? Because this means that OpenAI's relationship with Microsoft is probably deteriorating because OpenAI is starting to do things that Microsoft may not be agreeing with. OpenAI also wants its independence. It doesn't want to be under a company like Microsoft as much. Because at this point, I believe they owned 50%. Let me ask. Didn't they own 50% of OpenAI? Oops, wrong message. Oops, wrong message. Wrong window. Didn't they own 50% of OpenAI? All right, so just going back to Anthropic. Okay, so working on that. So this is a big deal because Microsoft is supposed to be the main partner, but also they started raising from competitors. Now OpenAI is taking money from everyone. If you remember, OpenAI started out as a nonprofit, and they were trying to figure out how to be sustainable as a nonprofit, but they couldn't figure it out because it's really hard to raise money as a nonprofit. You can't give people a return. It's a tax return, tax relief to the people who put money in a nonprofit, but it's not a return on investment because you put $100 million in a nonprofit, it just means you pay less taxes. But if you put $100 million in a for-profit and it becomes bigger, you can make billions of dollars. So most people don't want to invest in a nonprofit. So OpenAI had to create a for-profit, and now it's changing its kind of basic like understanding of how everything was going to work before. So Microsoft might not be loving that and saying, you know what, let's diversify our AI options. Because if they did that to us, who knows what else they'll do, right? So that's a big deal. So let me see. No, Microsoft does not own 50%. Current stake is approximately 27%. But okay, here it is. Earlier report 2019 to 2030 often referenced a 49% profit share entitlement in OpenAI's capped profit subsidiary. Outright 49% ownership of the entire company. So in the beginning they did, and again as they raised more and more and more, that percentage shrunk. So I guess 27% now. So again, it comes back to OpenAI is going to do whatever it has to do to survive, right? And this is another big deal. Last week, I think, or a week before, there was a whole thing about the war. I think I may have mentioned this. So this wasn't last week, but it's still a problem because now Claude and OpenAI are being looked at very differently from the public. People are believing that OpenAI will do whatever it takes, do whatever the government wants, surveil people, autonomously murder people, and Anthropic won't, right? That's how people are looking at it now. But again, we will see, because I think you got to put yourself in the place of the United States too. Not being political, but if you think about it, right? If you said, hey, we need the best technology to protect our citizens. If people send nukes, we need our best technology. If our best technology is Claude at the moment, we should have the ability to use that to protect us. The problem is, it's a slippery slope, because the government could also use Claude to spy on everybody. And so now, as I don't envy this guy's position, but the truth is, I don't know what I would do. What would you do, right? Because at the end of the day, I don't want AI surveilling people either. I don't want AI murdering people either. But I would like America to be protected in the best way possible. But once you open that box, Pandora's box, there's no closing it. You give them access to the best models, they can do whatever they want. Like, especially regimes that might look a little bit dictatorish, they may never leave office. You just never know. If they have ultimate intelligence power and ultimate. Think about what they were doing in Minnesota. Imagine if they had AI. Like, it could be really bad. So it's a crazy situation, and I get it, and I'm just glad I don't have to be the one that has to decide on that. But so Claude is actually having a good run. Look, they also launched code review. So if you are in the space of tech and building things, you understand now that AI can write code, you have unlimited PR requests, which means pull requests, which means the AI gives you code that it believes can better your product. Like, you give it, like you saw me building the thumbnail app. I didn't show you pull requests because it's my own project, just for me, so I don't need to protect anything. So I just let it do its thing. But for a project like Stack that has millions of dollars on the line, I can't just let the AI do it, right? So what we do is we create what's called pull requests, where the AI will do stuff, and then a human being will look over the code and say, okay, this is good. But very early on, it was easy to see that what was going to happen was there was going to be way too many pull requests, because the AI can literally create code all day, every day. So now humans' jobs mostly are going to be reviewing AI code. So I knew somebody was going to have to fix this, but look, they made code review in Claude Code, March 9th. So multi-agent system with Claude Code that automatically analyzes AI-generated code in pull requests, PRs, flags logic errors, security issues, suggests fixes, and helps maintain code bases. This is what's going to happen. Eventually, these code bases are just going to maintain themselves, really, because it's going to be too much code for humans to look at. There's no way, right? So if a autonomous agent can write code all day long, 24/7, unless you have a lot of people that can watch that code, it has to be that the AI is able to check on that code. And you already see they're doing a few other things too, and I'll see if it was last week, but can you find EVM bench? Actually, let me put that in a different chat, because I don't want to confuse this one. Can you give me info about EVM bench? So EVM bench is a Ethereum virtual machine. EVM stands for Ethereum virtual machine. So what I told you early on with the payments, this is all going through crypto, right? So this means smart contracts are going to be vulnerable to attack. So imagine if a human can hack a smart contract, imagine a swarm of AI agents, right? Or hundreds or millions of AI agents attacking that smart contract. They're going to be able to crack it one day. So what these companies are starting to do is they're starting to create benchmarks on smart contracts. Why? Because you don't want to put out financial rails and they just keep getting hacked. So what EVM bench is, and when did they launch this? Let me see. When was this launched? I guess what happened was, okay, the news was they went from 20% to 80% on EVM bench. So I'll explain what that means. 18th. So a little bit, I'm a little bit, it's just, there was a big update. Wasn't there a big update recently? Like they had a high jump? No, I didn't say that. There was a big jump in the EVM bench scores. Yeah, there it is. All right. Wasn't 5.4 very high, like 80% or something? So what ended up happening, so here's what the bench means. The benchmark means humans have hacked smart contracts. So what they do is they take the smart contracts that were hacked and they give it to AI agents, and they see if the AI agents can hack it the same way a human did. So in the beginning, the EVM bench was about 20%. What that means is for every 100 smart contracts that were hacked, the AIs were able to find about 20% of those same hacks and hack it too. So it was missing still 80% of current hacks. But recently, through the updates of the models getting better and better and the training getting better and better, it went to 80%. So they were able to find 80% of the same hacks that humans found 100% of the time. So what this means is just over time, yes, there was a notable jump. Specifically in exploit mode, where ChatGPT 5.3 hit around 71%, up from about 33%. All right, so it wasn't 80. Oh, yeah, here it is. Surpassing human baseline, and 87% on financial spreadsheet modeling. So basically, these things are exponentially getting better. What does that mean? That means we're all going to be able to create financial products and feel more comfortable. I'll be honest, when I first built Stack, I paid what's called a bug bounty. And the bug bounty is you would pay someone if they could hack your smart contract. Luckily, nobody was able to hack my smart contract, but it was always scary to me. Like, oh my God, the numbers are growing in Stack. And I couldn't, at that time, I couldn't afford an audit. The audits were costing like $100,000 to get an audit on your smart contract. So if the company is not making enough to cover a $100,000 audit, how do you get that? But now what's going to happen is these projects are starting to add, smart contract EVM benches that will tell you, okay, you can have this look at your smart contract. It will do better than an auditing firm for basically just the cost of tokens. And again, this is where it's democratizing all business types. So if you ever wanted to be in the finance space, you don't have to hope that some company hires you and you get 10 years of experience in JP Morgan before you can start your business. You can start now. I did. I never worked in finance other than marketing, and I was able to build a finance app. And that's the beauty of technology getting better. And I built that with my own thought in mind, and I'm expanding this actually. This is a good thing to talk about. I'm expanding my goal, right? They call it the MTP. Well, let me put what an MTP is up so you can see. My MTP, massively transformable purpose. What's an MTP? So no, not that one. No, and like the Peter Diamandis massive transformative purpose, I believe. Got it. Yeah, massive transformative purpose. Okay, what is a massive transformative purpose? It's a bold, highly aspirational statement, a tagline. So what I want to do, my first company I created, the first company I created for myself was called Mass Ideation. Why did I create that? The idea was I wanted to figure out how to create ideas that will help the most people possible. But I was very naive in thinking you're going to make money helping people, right? So I started the company and I didn't make any money until I went to advertising agencies and I had them pay me to make ads, right? That was one of the only things that people wanted to pay for. They paid well. I made mobile apps, games, websites, augmented reality stuff. So Mass Ideation became just a way, like an agency, like a production agency. So now, though, because of AI, it can do my original goal, which is create products that help the most people. So Stack was one of those first products because one thing I realized is 9 of people are saving for retirement. 90% of people don't, the top 10% own more assets than the bottom 90%, right? So that's a big wealth divide that's continuing to grow. So again, financial literacy, which I also did not have at an early age, I got it over time, and I realized, man, most people have no clue how the wealthy are just getting more and more wealthy let me build a product that will allow them to do the same thing the wealthy do. So I built that product. Now the problem I'm seeing is, even if you understand financial literacy, if you have no income or steady income, you can't invest, right? So now the challenge is not only giving people financial literacy that schools never gave them on purpose. Now what happens in a world where also your income may not be as guaranteed as it was in the past? And it never was 100% being able to get a job, but it was much easier even 10 years ago than it is now. And there's many reasons for that. But what I'm doing now is I'm saying, okay, I want to figure out how to have people let me know what, because again, now that we can build anything, and of course, people like me who have development experience, we probably can build things faster than a person that just started playing around with this stuff. The faster we can build things, the more we can protect ourselves, because the real truth is society is only going to be benefited of the bottom 90% if the bottom 90% owns the future products. Because again, why do the top 10% own more than the bottom 90%? Is because they invest in the products that are the biggest products now. They invest in the real estate that are the biggest properties now. So if we're going to change how society works, people need to invest in the things that are coming up next. Again, if you don't have money though, how could you do that? But luckily there's tools now where you can. It does take financial literacy to understand why you would do it. But for instance, equity crowdfunding. You can fund early stage companies now, even if you're not a rich person. The problem is that you have to understand that you're not going to get your money back for a long time. And that's if you get it back at all. But what I'm figuring out, and I got an idea, we're already working through the steps. What about if you had products that you already pay for and you've been paying for? No matter what level of wealth you have. What if those products you could also own? And every time you pay that service, you're paying your own company. Right? So I've been really working with ChatGPT, Claude on figuring out what those things could be and reaching out to partners. And I already got a partner on one of them. I'm just waiting to be able to talk about it. But that's just me coming up with ideas. But I don't think that's going to work. The real way it's going to work is for communities to come together and say, we need this. Somebody build this and we will invest in it, own it, vote on what happens in it. Now, what will happen? These are things we are going to have to pay for, whether there's UBI or not, right? Universal basic income, the government's paying our bills or not. Right? So you might as well be paying for a service that you own versus paying for a service that you don't own, right? And then you can get dividends, a vote, which you do get a vote. Like if you own Verizon stock, you do get a vote. And you do get dividends. Well, I think Verizon is a dividend stock. The problem is they're worth ridiculous amount of money already, right? So it's not like you got in early where the real money's made, because the real money's made when the business is worth sub $100 million, not hundreds of millions of dollars, right? Billions of dollars, actually. What's Verizon worth, actually? Let's see. What's Verizon worth? So while we do that, I'm also going to start looking up some YouTube stuff. See if there's anything we could react to. As of March 2026, Verizon is worth $214 billion, right? So now imagine if you invested in Verizon when it was worth $20 million. All right. What's the multiple return if you were able to invest in Verizon when it was worth $20 million? How much would $100 be if you invested in Verizon at a $20 million valuation now? Why am I saying this? Because, again, if you were buying early stage companies, that's when the money's really made. Once it goes public, most of the money has already been made. So the only way for the bottom 90% to come up is to invest early in companies that can become hundreds of billions of dollar companies. But you don't have that opportunity. Most don't. Not even wealthy people have that opportunity, to be honest. I'm part of a venture fund. And actually, I had a call this week that I would love to discuss and get your feedback as entrepreneurs, since most of you are entrepreneurs. Okay. Multiple return would have been 10,000x. 10,006. So, check this out. If you would have put $100 into Verizon when it was worth $20 million, you would now have $1 million. Okay, when was it? When was Verizon worth $20 million? It's never had a market capitalization as low as 20 million. You know why? Because only people pre-IPO were able to invest at that rate. So the earliest reliable public cap is above, okay. But there was a point where they were raising money at 20 million, right? Or did they start out the gate raising at a higher valuation than 20 million? Because that happens too now, right? Like ChatGPT raised out the gate. No, Verizon Communications or direct predecessor, Bell Atlantic, never raised money at a 20 million valuation. Not at founding, not in the early funding rounds. So look, even what? Verizon was formed. No, I'm talking about Bell Atlantic. When Bell Atlantic was formed, how did they raise money? Not formed through a traditional fundraise event like a venture capital initial public offering. AT&T Bell System monopoly effective January 1st, 1984. What about before that though? What about before 1984? I know it was around way before that. So again, this is information that's not easy to find because it's private. Private corporations can do whatever they want. Yes, the roots of what became Verizon go back much further, well before 1984. Key historical. So there must have been a time where it was worth 20 million then. Here's what you gotta do with AI. You gotta dig deep. There was never a point in history where Bell Telephone Company or its predecessors value exactly 20 million or even close to that low figure. Even in 1877 it was worth more. Weight. It was formed in 1877, totaling around 110,000 spent before reimbursement. So in 1877 it was worth $20 million. So okay, I'm talk investment stuff. So this week we had a call with our fund. I think I told you this. I'm part of a venture capital fund, and our goal is to help entrepreneurs get capital in different ways than just venture capital, right? So venture capital means you give up normally 20% of your company for a good amount of money. Average maybe $500 to $2 million, depending on the idea. $500K for 20% of your company, $2 million for 20% of your company means your company is either worth a few million or 10 million. So now, what we're trying to figure out is all the different ways companies can use that money, but also pay it back, because equity is expensive, right? So if I'm gonna do some math. Public math, but this is very important to understand if you're an entrepreneur, especially now, because it's never been easier to build, but it's also never been harder to get distribution, right? So most of venture capital goes to distribution. When you raise that money, last time I was told about this stat, it said about 70% of venture capital raised goes to Google and Facebook for advertising. So you're really raising that money to get distribution. What that means is your idea is probably decent and it's working a little bit. You just need more advertising for more people to see it. So, why do I bring that up? It's easier than ever to build, right? So now, distribution is everything, right? So, people want money to get in front of more customers faster. But you got to understand what that means. So, if you give away 20% of your company, and let's say you don't raise any more money, right? It's worth 10 million. You put 20%, you get 20%, they give you $2 million. Amazing, you got $2 million. You can work for a few years on that, but it really not a few years, maybe a couple years. Let's say it works and you get to be worth $100 million. Now that $2 million means the investors own 20% of the company worth $100 million. So that's $20 million, right? So if you sell the company for $100 million, they get $20 million, you get $80 million. That's how venture capital works, but it goes to billions, right? So let's say you get to $1 billion valuation and they sell, they get $200 million, right? And they gave you $2 million, they got back 200 million, right? So that's a great investment. That's why venture capital is willing to put money all over the place, because they don't need a bunch. They need a couple of people to do that, and they make all their money back on the losses. The problem is, it's not easy to exit, right? And that we see the companies that are worth $1 billion, and we're like, look, that company did it. But it's like looking at lotto winners and saying, look, that person won the lotto. I can win the lotto too. Let me play lotto because I could win lotto too. The odds are very low that you will win the lotto. Almost impossible. Same thing with business and going to $1 billion business level. It's almost impossible. So if in giving that away, in the middle there's kind of a difference, right? Where if you're not going to be a company that goes to $1 billion, those companies don't just raise once. They raise multiple times. If you look, they're like, oh, company raised a Series D, Series C. What that means is they raise multiple times. They raise pre-seed, seed, Series A, Series B, Series C. So every time they raise, they could be giving away 20% of the company. So that's why you see the founders end up with like very little percent of the company, even though it was their idea. They worked the project from start to finish, or most of them did. And they end up owning like 5% of the business when it's worth $100 billion. The investors own 95% of it, right? That's expensive capital. But that's the way it works right now. So we have been talking about for years that's unfair to most founders. Because again, if you don't get to that number and you want to sell your company, let's say you still own 30% of your company and you worked it, you did everything. When you exit, you're getting less money than the investors. And that's how venture capital works. And people understand that. Most entrepreneurs, I don't think, understand what they're doing when they accept money from investors. So what we said is, what is a more fair thing? So one of them is, it's called redeemable equity. So what redeemable equity means, it means you can buy back your equity. So let's say we take that same scenario. Your company's worth $10 million. You invest, they give you $2 million. In a few years, now you're worth $100 million. What you can do is you can pay back that, you can buy back that equity. It's going to cost you probably $5 million you got to pay back total. So let's say you took $2 million in, few years later you owe $5 million. So in 3 years you owe $4 more million, as I say. It sounds like a high interest loan, right? But it's way better than equity. So I would like to know what you think about that. Would you, as a business owner, do redeemable equity or venture capital? If you're a person building a startup that's interested in this, reach out, because we are starting the process of vetting companies that may want to do this. So that was the call on Monday with the venture fund. Like, this is a testing phase of that idea of redeemable equity. And we didn't invent it. We're just looking for alternatives to just pure venture capital, because again, that's such a small subset of businesses that are trying to go venture capital. I mean, go boom or bust, they call it, right? It means either you're going to be a $1 billion company or you're going out of business. And there's not a lot in between. And not every business wants that, right? Not every business says, okay, I want to be a $1 billion company or go out of business. What if it gets to be worth $500 million? That's an amazing business. But it's not venture, right? Venture doesn't want that. 500 million maybe. But let's say you get to $50 million business and you're making $50 million a year. That's not venture scale. Especially if you raise $20 million, right? So this is where the problem is. To get to 50 million, you might need to raise multiple rounds. And now you gave away all this money, so the venture capitalist is like, if you sell for 50 million, we're just gonna get our money back. So keep going, and you gotta grow faster, or we're gonna replace you. So this is the kind of stuff that, being in a venture fund, it's not just being in a venture fund. You could find these stories out. A lot of times, the people who tell them won't tell them publicly because they sign documents saying they can't say it. But I've been a advisor to many startups, and the stories are horrific, like very bad. I've heard founders who, as soon as they raised the money, got kicked out. Like within the quarter, got kicked out. I've heard founders that raised $8 million. Within a year, they're out of their own business because the venture capitalist or the investor, I don't know if it was always venture capital, sometimes it could be private equity, didn't believe they can get the company to the level where when they want to sell it, they will make a return. So you got to understand what you're signing when you take investment. And this is why I think crypto is becoming a way. And actually, that reminds me of something that happened this week that's very important. And I retweeted it. Brian Armstrong. All right, let me see if I find the Brian Armstrong. I'll share this. So Brian Armstrong is pushing. Yeah, right here it is. It's not this one, but actually that's a good tweet. Look, this is why Bitcoin is important. The 20 millionth Bitcoin was mined yesterday. Now there's only 1 million more Bitcoin to be mined, but it's going to take over 100 years for them to be mined. What does that mean? Everybody's going to be fighting over the same Bitcoin for 100 years. Now, not financial advice, but companies, countries, wealth funds, individuals, and AI agents all fighting over the last million Bitcoin for the next 100 years. I don't know about you, but I think that means the price will go up. It will go up and down, but overall, over time, it will go up. So I won't go too deep into that one, but overall, what Brian Armstrong, again, I make so many posts on things that I'm just going to go through, and then hopefully I'll find the Brian Armstrong one. I think I found it yesterday. Of course I can't find it. Let me just go to his page. There, oh, actually, this might have been it right here. All right, bam, exactly. Crypto will break down barriers around fundraising and capital formation. Literally what I just said. Why? Reducing friction around fundraising will increase the number of startups in the world, accelerating progress. Every entrepreneur knows how time-consuming and expensive fundraising can be, but also how dilutive of capital, of your ownership, it can be. So if you can create, this is what equity crowdfunding is started out as through the SEC. There's many platforms where you could just invest in companies that are worth sub $100 million. And if one of those companies ever reaches $1 billion, like I showed you, you can make a lot of money. But more than likely, most of those businesses go out of business. So it's very, very risky, right? But the real thing is, what if it wasn't risky? What would make it not risky? What if it was a product you use, right? Like imagine a product you use and you've been using for years and you pay for it every single month. Now, imagine being able to own that company, pay for that service, raise money so that company could be sustainable. Plus, it has a patron community that also owns it. That's what I think needs to happen. I'm working on that in many different ways. What I hope is Mass Ideation becomes kind of like an incubator where the community tells us, what do you want? What do you want? Okay, I would like to have XYZ because AI is creating this new problem that we don't even know because we don't know what AI is going to create. So, tell us. Here, I want this, I want that. We're going to try. We're going to put out a bunch of different ideas, but we're not going to build them until there's enough sign-off to build them. Right? Because that is the difference. Right now, since anything is buildable, you should only be building things that you already have traction that you know people want. Unless you're building it for yourself. Like me, I'm building my own thumbnail generator and a bunch of different other things because I need it. And I want my own version of it. It's going to be cheaper for me to have my own version of it than pay any other service. But at scale, we all are going to need things. And I actually think eventually communities are going to form not just around specific products, but around specific goals. And those communities will fundraise together and then also keep putting in funds to get their goals met. And that kind of goes into what's called the network state. There's a good book, if you haven't, ns.com, I believe. Yeah, the network state. So there's a free book online. I don't know where you can find it because he just changed this to a school. So look, he's creating, hey, look, this guy's doing it. You pay $1,500 a month. You get a roommate. You live in a community full of entrepreneurs. But you have to apply. They want to know what is your idea you're building because they want like-minded people around each other. $1,500, you're probably living in a cool space with entrepreneurs, but you got a roommate. Private room. Let's see how much is private room. Starting. So I'm guessing private room is more. Actually, let's see what the apply is. But it's also not, like, I think this is in Dubai, I want to say. Let me ask. Let me see. Where's the network state school or like community at local physically? Like what country? Malaysia, Singapore, near Singapore. Okay, that was off. So it's an hour away from Singapore. So it's basically in the middle of nowhere probably, and it's just you and a bunch of entrepreneurs building stuff. Okay, look at that. The solo room is $3,000 a month. But again, if I didn't have kids and I had a great idea and I had the money to do this, I would do it. It's no brainer because you're gonna be around the top level people doing amazing things, networking, building. But again, so now imagine something else. Imagine another type of idea that you like let's say, think about it like this. This is actually a good example. Think about the Green Bay Packers. The Green Bay Packers are owned by that state or city, Green Bay. Green Bay, I think it's a city. So everybody there owns part of the Green Bay Packers. So guess what they do? They support their team like nobody else. This is in the middle of nowhere, and they're still one of the best teams in football all the time. Why? Because their community backs up the football team because they own it. Right? And they own it. They don't get profit share, though. Actually, let's see. How does that work? How does the Green Bay Packers ownership work? I know I heard that the city owns, or whatever, the state, I don't know who, owns Green Bay Packers. How does that work? So, but they don't get ownership. Like, I visited a place called Mondragon, Spain. Okay, the Packers are not owned by the city of Green Bay or not owned by the state of Wisconsin. They are owned by Green Bay Packers, which is a publicly owned non-profit corporation. That means the team. I thought they own. No, all right, maybe I was wrong. You can't say you are a shareholder, but you don't get dividends. So I guess you can buy Green Bay stock. City does not own the team. The state does not own the team. Shareholders own stock in the corporation. No dividends are paid. Not correct. Fans own the Packers. Basically, yes. One rich person owns the Packers. No. A non-profit corporation owns the Packers. Yes. So I knew there was something like that. I don't know the exacts, but they don't get any dividends. Dividends meaning they don't get profit share. So if a company does $1 billion, if Green Bay Packers do $1 billion in profits next year, those people get nothing. But I visited a place called Mondragon, Spain, where everybody in that city does. Watch, let's look at Mondragon, Spain. Can you break down Mondragon, Spain, and how that works? I know it's a cooperative where the people who live there, work there, get ownership of companies and profit share. This model is amazing, and I think I went there in 2018 or something like that. I forget when. I was sent through a project that I was working with in the Bronx, MIT CoLab, which is part of the college MIT. They paid for me to go visit Mondragon, Spain, and meet with the companies, the people who put it together, who manage it, to see if I could bring back some of those learnings. Yes. But one important correction. Mondragon is not a town where all residents automatically own everything. It's a network of worker cooperatives. So, again, everybody who lives in the town works in that. Those are the only jobs, right? So they basically do. Workers who become member owners in the cooperative can share in governance, profit sharing, and capital. It began in the 1950s, and most people do not even know it exists, right? So, how much does Mondragon make every year? Did you see this? And nobody even knows this exists. Oh, it's still going, actually. So when I saw this model, I kept thinking, how can we do this in the United States? I tried many different things. Actually, the project went away. The Bronx company that was working on it stopped working on it. But I always kept it in my brain. And then that's why when crypto came along and the DAO was an entity that could be formed and people can vote, own, get dividends, I was like, this is actually easier to do what Mondragon does. So, but again, crypto has a dirty back word. There's a bad word where most people don't want anything to do with it. Look at this. Total revenue 11 billion, 12 billion USD in 2024. Right? In total profit, oh, that's euro. 680 million of profit. 70,000 workers. So 70,000 people profit share in this cooperative. Number of co-ops. So it's 100 different companies that people work for and share the profit. So I met with a furniture company. I met with a car parts company. I met with like a metal kind of factory that worked on metal parts, because what they did is they created like an ecosystem of all the things that these companies need. So instead of buying something that the company needs from some other country, they just create a cooperative that makes it. So they basically created all kind of companies that buy from each other and keep each other making all the money. It was awesome, and it was. I actually have footage somewhere about around. I gotta find that footage and maybe make a little documentary on that. But it was crazy. Like I remember being like, this is probably one of the cleanest, safest cities I've ever been to, and of course it is. Nobody has to worry about nothing. There's no people sleeping on the street because everybody gets a job when they're children. I visited the school. So the schools K through 12, they are teaching them this system about, it's not just about you, it's about all of us. You're going to build stuff that helps all of us. Not just one of us is going to be a billionaire and everybody else is screwed. And again, I know it's a socialist country, so whatever you think about socialism and capitalism, my thing is I just seen both worlds, and being from the Bronx and seeing how that was when I grew up, and it still is, and just seeing America, like the difference in poverty and wealth, there wasn't that there. Everybody was similar. There was maybe one or two people that had a BMW and everybody else had a Toyota, something like that. It wasn't like, also the owner actually wasn't, I think, what's the disparity of the boss to the lowest level employee salary? That was a big deal, because in America it's like 10,000 times more. The salary of the lowest worker to the CEO is ridiculous. Here I believe it was like 6 to 1. So now what that means is, let's say, okay, it is exactly the same everywhere. No, other well-cited descriptions of Mondragon have 9 to 1. All right, 9 to 1. What is the average disparity of a CEO and lowest level employee in the United States? And if we go publicly traded only, oh my God. 285 to 1. That's what I mean, right? So again, I know that this is where I'm not trying to be a doomer on the AI thing, but if we don't start owning the products we use and making them ourselves and profit sharing for ourselves, this is going to get so much worse. Because look at what companies have been doing over the past few weeks. Firing thousands and thousands of people, and that is not stopping, right? It's going to get more and more. So now, yes, there'll be less people. Maybe they get paid better. The CEO gets paid maybe more. But less people are needed for work. There's only two directions that goes to. It either means there's a lot more small companies, or a lot of people don't have work. That's the only option. If this keeps happening, which I don't see why it wouldn't, and if you use AI consistently, you will see what I see. It's not getting worse, it's getting better every week. So, if they're already firing thousands and thousands and thousands of people, and it's getting better, do you think that's going to change? I don't think so. So now, what's the other option? All these people laid off, there's infinite problems to solve. If you can have AI teach you how to solve the problem and make money doing it, yeah, you don't have a job anymore. You are an entrepreneur, but you're living life being paid to solve a problem. Instead of just hoping a CEO hires you, you go out and find the problem. That's what entrepreneurship is. We just find problems we think we can solve and make money from it. For me specifically, I would like, the problem I solve is having AI help humanity. I would like to pay my bills by having AI help humanity. So the first thing I did was I built Stack. I'm building a few more. I can't talk about them yet, but as soon as I can, I will. Thank you, whoever watched, whenever you watched live. Thank you. Like, subscribe, put the notification bell. Thank you so much. See you tomorrow, 7 p.m. Eastern. Actually, tomorrow's the live with the community. So join the free community. Link in the description. If you want to learn how to create your first AI agent, link in the description. If you want to learn how to borrow off your Bitcoin, Ethereum and not get liquidated, to grow wealth while you spend, Link is in the description. See you tomorrow. Hopefully you're in the community call with me. Thank you. See you next time.